Welcome to the FinGlimpse podcast, where we analyze the world of business, finance, and the economy. We cover the latest market news, economic trends, and some interesting businesses. As a standard disclaimer, this podcast is for informational purposes only and should not be considered investment advice. Always do your own research. Now, let's get started.
We often just, drive over massive bridges or ride the metro deep underground without really thinking about it. But have you ever stopped to consider the incredible engineering behind them and the companies that, make it all happen?
It's way more than just concrete and steel, isn't it? These structures are like the hidden arteries of our modern world, shaping our lives every day.
Exactly. And building them takes serious engineering skill, understanding complex places, and, frankly, a company with a proven track record.
Which brings us to what we're digging into today.
Right. Our mission here is to sort of cut through all the corporate jargon and complex numbers and pull out the key insights about a real giant in this space. Afcons Infrastructure Ltd. We want to give you a quick way to get up to speed on a company that's literally building the future, both in India and increasingly around the world.
And we're drawing this all directly from their latest annual report, the one for 2024-25. It gives a really comprehensive look at, how they operate, their finances, where they're headed.
Okay, so let's unpack Afcons. They've got history, right? Over 60 years.
Yeah, and they're known as a crown jewel of the Shapoorji Pallonji Group. That's a name with serious weight, a global construction group with over 158 years behind it.
So Afcons isn't just some company, it's built on a real legacy.
Definitely. And their journey shows what they call purposeful growth. Started growing in India, now they've delivered projects or are working on them in something like 30 countries.
Wow.
Yeah.
How do they manage that scope?
Well, they're structured across 5 main business areas, verticals they call them: marine and industrial, hydro and underground,
Okay.
surface transport, oil and gas, and urban infrastructure. So quite diversified.
And the scale is just mind-boggling when you look at the numbers. We're talking thousands of lane kilometers of roads.
Over 5,100.
Hundreds of kilometers of metro lines, both above and below ground.
More than 150 kilometers there. Plus nearly 200 bridges, flyovers, 235 marine works, 65 plus kilometers of tunneling using net in. The new Austrian tunneling method. It's a modern technique. They've also done irrigation, water supply, hydro works, LNG tanks. It's a huge list.
It really is. And these numbers are impressive, but it's the actual projects that make you go, wow.
Exactly. The complexity, the significance of some of these, that's where you really see their capability shine.
Like that Chenab railway bridge in Jammu and Kashmir. The world's highest single-arch railway bridge. What's the most striking thing about that from an engineering standpoint?
Oh, it has to be the precision needed. Building something that massive in that kind of terrain, it's just audacious, really. And the fact it won major awards, like from NDTV and Frashakti and Construction Times,
Right.
shows it's recognized beyond just the technical side.
Yeah, that makes sense. And they seem to like firsts. India's first underwater tunnel in Kolkata for the East-West Metro.
That's them.
Yeah.
Including Howrah Station, which is India's deepest metro station.
Deepest. That must have thrown up some unique challenges.
Absolutely.
Yeah.
Tunneling underwater is one thing, then excavating that deep for a station. You need top-notch techniques for ground stabilization, waterproofing, handling immense pressure. It really shows how they tackle extreme environments.
And you see that same kind of problem solving elsewhere, too, like at the Far Out Mumbai container terminals. That's JNPT, right? India's biggest container port.
Yep, they built a suspended deck wharf and approach trestles there. They were also involved in India's first 4-layer transport system in Nagpur.
4 layers.
Yeah. And they did the first steel superstructure replacement on the Mahatma Gandhi Setu Bridge in Bihar, replacing the old concrete. That even won an innovation award.
Okay, so what are they working on right now? Any big ones?
Oh yeah, their current project list is just as ambitious. There's the Mumbai-Ahmedabad high-speed rail package C2, which includes India's first undersea rail tunnel.
Undersea rail. Wow.
Then there's the Greater Mail Connectivity Project in the Maldives. That's the biggest infrastructure project in that country. Plus, the Delhi-Meerut Rapid Transit System, Bangalore Metro, the Mumbai-Pune Expressway's missing link,
The missing link right.
Delhi Metro Phase 4, road tunnels in Himachal Pradesh, a crude oil terminal in Mundra. It's a broad mix, giving them really good visibility for the future.
Building all this obviously involves huge finances, but even giants face challenges. So let's shift gears and look at their financial picture this past year. How did they hold up?
Well, it was an interesting year, fiscally speaking.
The report mentioned something unusual for them, didn't it? For only the second time in 10 years, they actually missed their budgeted turnover target.
That's right. Total income dipped slightly, down to about 13,023 crores from 13,647 crores the previous year.
So what caused that? Was it internal issues?
Not really, according to the report. It points more to external factors they couldn't directly control. Things like payment delays on certain projects, like the Jal Jeevan Mission. Political instability in Bangladesh affected some work there, and generally it was a bit slower turning bids into actual contracts.
Right, but here's the interesting part you were saying, despite that dip.
Exactly. Despite the turnover dip, they actually came out financially stronger in some key ways. Their EBITDA, that's earnings before interest, taxes, depreciation, amortization, a core profitability measure, it grew by 5% to 1,662 crores. And crucially, their EBITDA margin improved quite a bit by 120 basis points, hitting 12.8%.
So more profitable even with slightly less revenue.
Pretty much. And profit after tax was up too by 8%, reaching 487 crores. They also made a big dent in their debt. Gross debt down to 2,236 crores.
Which does what to their ratios?
It brought their debt-to-equity ratio down significantly from 0.68 to 0.42, much healthier. It really highlights, I think, their financial discipline, even when facing headwinds.
That kind of prudence, what does it signal about their overall strategy, do you think? And looking ahead, you mentioned visibility. Their order book sounds strong.
Very strong. As of the end of March 2025, their pending orders stood at nearly 37,000 crores.
37,000 crores.
Yeah, and almost 60% of that is still to be executed. Plus, they added about 16,000 crores in new orders just in the 2024-25 fiscal year.
So plenty in the pipeline. And they had their IPO during this period too, right? November 2024.
That was a huge milestone, listed on both the NSE and BSE in India.
How much did they raise, and what was the plan for that money?
They raised 12,250 crores, and the report details how they used most of it by March 2025. A big chunk, 600 crores, went straight to paying down debt.
Smart move, ties in with the debt reduction you mentioned.
Exactly. Another 320 crores went into working capital, which is essential for day-to-day operations on these big projects. Some for capital expenditure, buying new equipment and such, and the rest for general corporate purposes.
All sounds very strategic, bolstering the balance sheet, funding operations.
Precisely. It shows a clear focus on financial stability and having the resources ready to tackle those complex jobs, push further internationally, bid selectively, and just keep building that long-term value. That seems to be the core strategy.
Okay, beyond the finances and the physical building, there's another aspect of Afcons that really jumped out at me. It's about knowledge and learning.
Ah, yes. That's quite unique, isn't it?
It really is. You don't immediately think knowledge management leader when you think infrastructure giant. But get this, Afcons has won the most innovative knowledge enterprise award, the Mike Award, for 7 years running.
7 years, both globally and in India.
And they're the only Indian infrastructure company to get this recognition. Why is that such a big deal in their industry?
Because it signals a very different approach. It shows they genuinely treat knowledge as a core asset, a competitive advantage. They have this whole philosophy of learn before, during, and after every single project.
So it's systematic.
Very much so. They even have their own framework called improvation. It sounds like a blend of improvement and innovation, right? It basically links that continuous learning directly to practical problem solving on the ground.
That's fascinating. Not just lessons learned, but actively innovating based on knowledge.
Exactly, and it's driven from the top. Their deputy MD, Mr. Giridhar Rajagopalan, actually heads up technical functions, including knowledge management. He spearheaded their success with the earlier Make Award and now the Mike Awards.
So it's deeply embedded in their culture.
No.
Now let's talk about sustainability and how they impact society. This seems to be another area where they're putting in serious effort, going beyond just the core business.
Absolutely. If you look at their environmental performance in FY 2024-25, the numbers are pretty striking.
What stands out?
Well, they reported significant cuts in intensity. That's the amount used per unit of turnover. Energy intensity down 24%, water intensity down 23%, waste intensity also down 23%.
Those are big drops in efficiency. How are they achieving that?
Through specific initiatives. Things like developing green belts, using treated wastewater, switching to more environmentally friendly refrigerants like R410A.
Okay.
And importantly, using industrial byproducts fly ash and GGBS, which is granulated blast furnace slag, to replace some of the standard cement in their concrete.
Which helps how?
2 ways. It cuts the carbon footprint because cement production is very energy intensive and it can actually make the final structure last longer. Plus, they mentioned sourcing 79% of their inputs sustainably.
That's substantial. And what about safety? On these huge, complex sites, safety has to be paramount.
It absolutely is.
Yeah.
They highlight their HSE health, safety, and environment management system as industry-leading. And get this, over 65% of their team have engineering or advanced safety degrees.
That's a lot of specialized knowledge.
It is. And they ran almost 17,000 training sessions on HSE topics in the year. They also reported 0 conflicts of interest, which points to strong ethics.
Any external recognition for safety?
Yes, several projects won the British Safety Council's International Safety Award. And the hard numbers, the safety stats, are crucial here.
Right. How do those look?
Significant improvements. The LTIFR lost time injury frequency rate dropped sharply for both their direct employees and contracted workers. The actual number of recordable injuries also decreased.
That's good news. What about the most serious incidents?
The report notes 1 employee fatality, same as the previous year, but worker fatalities dropped from 7 down to 4. Still tragic, of course, but the overall trend in injury rates points towards their safety systems having a positive impact.
And beyond safety, how do they engage their workforce? It's a huge number of people involved.
Over 29,000 total workers, including subcontractors. They focus on creating a healthy and engaging environment, medical camps, safety workshops, cultural events, knowledge forums, and significantly, they state 100% of employees had performance and career development reviews.
That shows a commitment to individual growth. What about their impact outside the company gates? Their CSR, corporate social responsibility?
They emphasize long-term initiatives in underserved areas, focusing on education, skills, water access, healthcare. And they say these are designed with local communities, not just imposed on them.
Any specific examples of impact?
Yeah, they mentioned things like over 300 students benefiting from education programs, farmers helped with livelihood schemes, thousands of students getting better water access, and a high percentage of beneficiaries are from vulnerable groups.
How much did they spend on CSR?
For FY 2024-25, the expenditure was 3.46 crores. This included using some funds carried over. The actual required amount was a bit higher, 4.37 crores, so there was an unspent amount of 90 lakhs, which they transferred to a special CSR account for future use. So while they didn't quite hit the mandated spend for the year itself, the report shows ongoing activity and clear community benefits.
Okay, let's zoom out a bit and look at the bigger picture. The economic environment Afcons is operating in, it seems pretty dynamic right now.
Oh, definitely. Globally, growth was decent in 2024. Around 3.3%, but it's projected to slow a touch in 2025, maybe 2.8%.
What are the main headwinds?
The usual suspects, really. Inflation is still sticky in places. There's trade policy uncertainty, say U.S. tariffs and things like that.
Right.
Geopolitical conflicts are obviously a major risk. Climate change impacts and high debt levels in many countries. All this can dampen business confidence and leads to things like de-risking.
De-risking? You mean companies trying to make their supply chains safer?
Exactly. Diversifying where they get things from, maybe moving production closer to home, near-shoring, or to friendly countries, friend-shoring.
But despite all that, the construction sector itself is projected to grow.
Significantly, yes. Globally, it's expected to go from just under $6 trillion in 2024 to over $9 trillion by 2034.
Wow. Where's most of that growth coming from?
Asia-Pacific is a huge engine. It already accounts for nearly 40% of the global construction market by value.
And what about Africa? Afcons has a presence there, too.
Africa is another key emerging market. Construction there is projected to grow from about $61 billion in 2025 to $77 billion by 2030. That's a healthy 4.8% average annual growth.
Which parts of Africa are leading?
Sub-Saharan Africa looks particularly strong. Even with some governments facing budget pressures, the underlying drivers, urbanization, population growth, keep the outlook positive. There's a massive infrastructure funding gap, maybe $70 to $100 billion a year.
A gap, but that's an opportunity, right?
Exactly. That gap is precisely what's driving investment in big regional projects like the African Continental Free Trade Area. Huge potential for companies like Afcons.
Okay, and back home in India, you mentioned an infrastructural boom earlier.
Yeah, India's economy is looking relatively strong. The RBI projects GDP growth around 6.5% for FY 2024-25.
And the RBI has been cutting interest rates.
They trimmed the repo rate twice in early 2025, down to 6.00%. That's generally seen as a move to encourage borrowing and investment, which helps sectors like construction.
Plus the government's big push on infra.
Absolutely. There's a real focus involving more private sector participation, incentives for foreign direct investment, And then there's the National Monetization Pipeline, NMP.
Right, and NPI, what's the scale of that?
It's massive. The target is 10 lakh crores. That's 10 trillion rupees over the 5 years from 2025-26. They're aiming for about 2 lakh crores just in this first year, FY 2025-26.
Building on the first NMP.
Yeah, NMP 1.0 apparently hit 94% of its targets. This is the next big phase. Covers coal, mining, highways, power, railways, even public land. Loads of opportunities opening up.
Let's break down some of those sectors.
Roads. India already has the world's second largest road network, over 146,000 kilometers of national highways. The budget for roads in FY 2025-26 is up slightly to 2.87 lakh crores, and there are plans for 15 major new projects alone, worth 44,000 crores.
Railways, still a big focus.
Huge focus. Capital expenditure for railways is set at 2.65 lakh crores for 2025-26, and the long-term goal, 7,000 kilometers of high-speed rail by 2045.
Ambitious. And urban infra, metros.
Metros remain absolutely central to transforming city transport, still a major growth area.
And ports, maritime infrastructure.
So expanding. India has 12 major ports, over 200 minor ones. There's this Maritime India Vision 2030, aiming to unlock massive revenue and create millions of jobs. So across the board, roads, rail, urban, maritime, the outlook in India looks really strong for infrastructure players.
Okay, with all this massive activity, complex projects, global reach, governance and risk management must be incredibly important. How does Afcons handle that side of things?
They state a clear philosophy: accountability, transparency, fairness, high ethical standards. And they emphasize full compliance with SEBI's listing regulations. That's crucial now they're a public company.
How is that structured internally?
They have a standard board of directors set up, with key committees overseeing specific areas: audit, nomination, and remuneration, CSR and sustainability, and importantly, a dedicated risk management committee.
What about transparency mechanisms, whistleblowers?
They mention having a vigil mechanism or whistleblower policy, plus a code of conduct for senior people. The report also explicitly states no employee was denied access to the audit committee last year, which suggests an open channel.
Makes sense. But building these huge things is inherently risky. You mentioned diversification, but how do they specifically tackle things like, say, geopolitical risk in some of the international markets, or those volatile raw material prices?
Good points. For geopolitical risks, beyond diversifying across regions Africa, Middle East, Asia, they do a few key things. They try to get paid for overseas projects in hard currencies like US dollars or euros to avoid local currency fluctuations.
Smart.
They use hedging strategies too. Plus, rigorous due diligence, legal, tax, political, before they bid and during execution. And partnering with local firms and training local workers helps navigate nuances on the ground.
And raw material prices, that must be a headache with fixed price contracts sometimes.
The report acknowledges rising costs and fixed price deals are challenges. It doesn't detail specific hedging strategies for materials, but it implies ongoing management. Likely involves careful procurement and trying to build protective clauses for price escalation or delays into contracts wherever possible.
It's also fair to touch on legal challenges, right? Contingent liabilities. Gives a fuller picture.
Definitely. The report is transparent about these. There's a significant counterclaim mentioned from Chennai Metro Rail, CMRL, nearly 1,946 crores about alleged defective tunneling.
That sounds serious.
It does, but the report also states very clearly that the arbitral tribunal rejected those counterclaims. So Afcons seems to have prevailed there, though there might be further appeals. There are also other arbitration awards that clients are challenging.
Anything else significant?
A couple of tax-related issues. A big demand, 483 crores, related to royalty on muram, a type of construction material, but they've got a stay order and are confident it won't stand.
Okay.
Then there's a smaller GST penalty claim of about 39 crores, which they're disputing, and an income tax demand of about 8 crores, also under stay. Importantly, the report also expresses confidence in recovering significant amounts owed to them by clients, over 650 crores from construction contracts, and another 190 crores or so from KRCL related to design changes. So it's a mixed bag, but they seem confident in their positions.
So bringing this all together, what's the main takeaway from Afcon's annual report? It really paints a picture of resilience, doesn't it?
I think so. Resilience in facing challenges, smart financial management, but also this deep, maybe unexpected commitment to innovation and knowledge. They're clearly a major force, balancing huge projects with a real focus on sustainability and social responsibility.
Yeah, digging into just one company's report like this really underscores how vital these infrastructure players are, often unseen, but their work underpins so much of global development and daily life.
Absolutely. It moves way beyond just the headlines of big bridge built and shows you the sheer complexity, the strategy, the risks, and ultimately the value they bring.
So, for you listening,
Right.
how does looking closely at a company like Afcons change how you see the infrastructure around you? Does it make you think differently about global stability or progress? And did you spot any surprising links between, say, their financial health, their green initiatives, and maybe even your own daily commute? Something to ponder.
That's all for this episode of the FinGlimpse podcast. If you found our discussion insightful, please consider subscribing and leaving a review. We'd love to hear your thoughts and suggestions for future topics. Until next time, stay informed and make smart decisions. Goodbye.